morning. Today is Wednesday, October 13th, 2021, and I am back with another edition of the Wednesday live show, which I know a lot of you will be watching on replay. So, anyway, let's see what's going on this morning. We got the CPI number, which came out at annual inflation rate, according to CPI, 5.4%, I believe, which was just a little bit over the estimate, but nevertheless, that's the highest inflation rate in 13 years based on what I saw. And of course, it's starting to become pervasive in the public knowledge that the prices of everything are going up, which is kind of funny because anybody that goes grocery shopping knows that prices have been going up for quite a while. And quite frankly, the cost of living, which I'm sure everybody's aware of, has been going up my entire life. And that's just the way that it works. But with inflation running hot now, boy, the Fed's really kind of painted themselves into a corner because in theory, the economy is slowing down. And now you got inflation, which is a whole conversation in and of itself. What's causing inflation? But, the Fed's been insisting that it's transitory for quite some time, and they're still sticking by their transitory narrative, although, it's, pre-pandemic and even at the beginning of the pandemic, which is a long time ago. Geez, we're talking spring of 2020. Powell said that he didn't expect inflation to be a problem, and then inflation's been sort of creeping up, and everybody knows that prices have been rising at the grocery store, like I say, for years, but they like to pretend that there was no inflation for a lot of pre-pandemic. I mean, 2018, 2019, they were worried that, about reaching their 2% target. Well, here we are today at, prices have gone up at all the restaurants, everybody knows, at the grocery store. The price of gas is significantly higher than it has been for years, right? Oil's up around what, $80 a barrel, close to it, and some are saying it's going to 100. And back in the old days, I recall that the price of oil, it really kind of trickles through the whole economy as far as raising prices. And so, that's going to become an issue too. You don't really hear that many people talk about it, but, obviously, that everything tangible, physical, is affected by the price of fuel to get it to where it needs to be. So, anyway, all that aside, also today, I believe at 2 o'clock Eastern Time, the Fed minutes come out from the last Fed meeting, which obviously is is hindsight. So, but the market does tend to react over Fed language, and so this morning I think I read that there's like 90% chance of rate hikes priced in. So basically, we're in kind of an uncomfortable spot. The S&P, as you can see here, is only about, I'd say roughly 4%. I didn't do the exact math, but roughly 4% off the all-time high in the history of the world. I drew that overhead trend line just as sort of a visual reference point. At one point I had it across these highs. I think I might have last week on the show I drew it, but as time goes on, it makes more sense to connect this higher point here, right? Actually, if I put this on candlesticks and I move this trend line so it was across this high, you'd just have a few of, wicks. This wick would be sticking up, a couple of wicks or whatever. But anyway, I kind of prefer the open, high, low, close bars. So anyway, there's your overhead resistance, and you can see that last week the market attempted to rally. That's the 50-day moving average, that orange thin line there. And you can see the market attempted to rally back up towards the 50-day, and look at where we are now, right? So anyway, a positive development, I suppose, well, something, I wouldn't say development, but positive thing is that it's still kind of a normal, just a normal sort of pullback, right? A dip is a dip's like 3%, 3 to 5%. So maybe we're still in dip territory here, but we're getting close. Down here is more of a pullback, and so this is kind of we're somewhere between a dip and a pullback. Depends on how you want to characterize it. However, you zoom out on the chart here, and it's a little bit precarious just due to the persistent rise that we had here. Let me go back even further. Yeah, I like to, when I take a longer term view now, it's always a good idea to have the pandemic sell off on the chart. Which, by the way, I remember doing the math back then. It was like 35% from intraday high to intraday low. And you'll see some news outlets, they like to use the closing prices to say it was like 30% or whatever, but I remember doing the math at the time, and I'm pretty sure it was 35% in a very short amount of time too. For the market to lose 35% in that short amount of time was basically yeah, but it was a quick bear market, right? I mean, you know, the thing about bear markets, and I've read this a couple places, is that some people characterize a bear market as 20% off the highs, right? And simple number, but I've also read that bear markets are more not just a number, but when most stocks get crushed and don't come back, and it persists for a long period of time, and every rally gets sold. And this was, I mean, number wise, it was a bear market, but it was more of just like a panic sell off for a few weeks there, and then the Fed jumped in, turned the whole ship around with trillions of dollars in emergency, trillions of dollars. And I mean, I've read that you're talking like $10 trillion is how much they've spent or whatever. But I don't, I'm not good at remembering all these numbers because they're so fluid. But $10 trillion is basically about the amount of money they've added to their balance sheet, I suppose, since the beginning. But all that aside, getting back to the market here, as I pointed out, even when I had that trend line drawn across these highs and these highs, I was saying, over the past couple of weeks that you want to be kind of, cautious until the market's able to break back over that trend line. And there was a couple of pokes over it, but no close. Like if I move it back to, well, see, this is why I hate doing this, but if I move it back to, where I originally had it, something like that, there was really no closes over the trend line. There's a couple of pokes at it, and you can see this day. I'm going to put it right back where it was. You can see this particular day here, the market attempted to rally up significantly, and then look at how it faded back down. And then the past 4 days have been down. Well, today's not over obviously, but the past 3 days have been down. So it's a little precarious, and still gotta sort of err on the side of caution. Let's look at the Qs here, see what they look like. Same sort of thing. The Qs look like they sold off a bit more, like this low got taken out, and this rally attempt last week didn't bring it up anywhere near to the 50-day. And look at how the 50-day is starting to slope down now. So that's going to be a resistance point on the NASDAQ 100, which is being driven by a handful of stocks. But if you notice Facebook, look at Facebook here. Obviously they've had some issues, but they always seem to bounce back. But here's what's going to be interesting about Facebook is you can see the last time back here, that last time it tested the 200-day, the 200-day basically held. I mean, yeah, there was some forays below it, but it didn't lose the 200 day. And so is what's amazing is how yesterday's low was literally right on the 200-day moving average. Pretty amazing how that works. So, it's almost like someone has a machine programmed to buy it at the 200-day, but it'll be interesting to see what happens this time. We could get a consolidation here around the 200-day. Even back over here, it was kind of it really there was not a single day that was completely below the 200-day moving average, right? Like each one of these days, even when it was below it, it never like there was never any price action completely below it. So anyway, that's something to keep an eye on. Apple came out with news yesterday that they're going to have to cut back production because of chip shortages, which we've known about for a long time, and so Apple's a little precarious too. Um, it kind of looks like it may want to sell down Tesla's 200 days. So anyway, right now is pretty good time to be sort of cautious, and we've just started earnings season too. That's the other thing. I think J.P. Morgan, I believe, came out with earnings this morning. So getting a little sell down here, a couple of percent from the earnings release. It'd been going up. So let's see. Oh, also, another interesting thing this morning I read is that Social Security payments are going to be increased by 5.9% in 2022, that's a pretty big deal. I mean, that's very significant if you think about how many Americans are on Social Security and getting those payments. So a 5.9% increase is significant. And it's about time. Quite frankly, there was back a few years ago, um, we knew that prices were going up and the cost of living was going up like it always does, but they were pretending there was, no inflation at all, and therefore, they didn't need to raise the Social Security that people are getting, and so now they've finally decided to raise it. So it's kind of interesting, but okay. So we looked through a few stocks. Oh, the last one here. Looked through a few indexes. The last one is the Russell 2000, which I took the liberty this morning of actually drawing. I didn't want to have to do this live on the show because how the charts are all kind of goofy when I do that, but so I decided that I would draw this rectangle around, basically the price action. Now, of course, there was a couple of pokes below that, but that pretty much encompasses. And look at this. I mean, this goes back to basically, I probably could have extended that back to the beginning of January practically, move it over a little bit, but you get the idea. So the Russell 2000 just absolutely going nowhere, and interestingly enough, it's just it's right smack in the middle of its range. I mean, this is a long, long, persistent range, and you can see the 200-day moving average here has just been rising and rising and rising right up to meet the price here, and so it's just kind of an interesting look. So I can't tell you the last time I saw a big giant consolidation like that on an index. I mean, I'd have to look around, but I mean, basically, you're talking almost the entire year so far has just been a one big sort of choppy trading range. So theoretically, when it breaks out of this range, I mean, it can't possibly trade in this range forever. It could probably still go on for a long time, but if it makes a substantial break out of this range in either direction, then probably going to get a significant move in that direction, unless it sells down and sort of pokes out of the bottom and then rallies back in the middle. So who knows? But it's just an interesting chart to see. That's 2,000 stocks there, and for it to be like sitting right in the midpoint is even stranger. It's definitely not something that you see that often. a consolidation like that. So there's a lot going on here, but quite frankly, there's still no direction, right? It could sell off quite a bit, get down around and maybe even poke out of the bottom of the box, and that doesn't necessarily mean that there's going to be a huge move. And conversely, it would be hard to imagine, but conversely, it could rally up to the top of the box and maybe poke out a little bit. The small caps tend to be strong, seasonally speaking, towards the end of the year, and so that may be in the cards, right? The market's looking a little sketchy now, but as we get closer towards the holidays, the market tends to be strong in the fourth quarter of the year. Um, so there's earnings season to contend with here, and we'll just have to see what happens with that. So, real quickly, we still have the same three pending trades that we've had for quite some time now. The triggers have changed a little bit, but today started off. Here's the first one, AMD. Today is looking like a day where there's potential, right? There's some potential here of AMD actually triggering in. So that's, I suppose, a positive development. Now, let me see when they're releasing earnings real quick here. 10:26 after the market closes. Um, so that's kind of, well, I mean, there's still time. There's still time. We get a close there, but we're not going to hold this over earnings. But hey, once AMD can really take off when it starts to move, right? And there we go. Like sometimes when it gets something going, it's a really quick move, and so I think we have. Whoops, what did I even do there? Oh boy, huh? There we go. Glad I was able to get that chart back because I don't even know what happened. But anyway, keep your eye on that. So it would actually be nice to have an open trade, even though the market itself is kind of, so this is sort of bucking the trend here. I mean, market's acting really weak today, but so real quick, let me look at the semiconductors, because the big news now is about the semiconductor shortage. Well, this is interesting. The semiconductor index is like basically pulled back and sitting right on the 200-day moving average, which it hasn't touched since, wow, look at that. I mean, you got to go back well over a year since the last time that you got a couple of touches on it. Look at how you got like this touch and a bounce and another sort of touch, very similar to what happened back here in, like, I guess May of 2020. So it's kind of interesting, but yeah. So keep your eye on this because semiconductors obviously kind of a bellwether for tech. So I know what I haven't looked at in a while is ARC. I haven't looked at this in a while because this is yeah, ARC's kind of looking a little rough here, right? Interestingly enough, in the spring it really sold down hard. But this is not the greatest looking pattern right here at all. It's really not. It kind of looks like a big sort of channel. Now, the only positive thing here is that it's kind of, and this is pretty parallel too, but it's just sort of tested the bottom of the channel, and so you could get a rally up. But look at this, you got the 50-day overhead resistance, you got the top of the channel, and the 200 days starting to curl over there, so that'll be big resistance. But that's just sort of an interesting chart to look at because of what it represents, what it is. So, all right, so back to the pending stocks. We got Johnson and Johnson, this is getting dangerously close to getting removed from the pending list. Now, just because it drops below the 200-day for a period of time, like you can see, it's done it multiple times, but more recently, like here, it kind of tested it. But here, you spent some time below it and then right back above it. But you know, it's going to have to. It's either going to do one of two things. It's gonna drop down and probably come off the list if it goes down much further, because then it's if it goes down too much further, then it's really breaking down. That doesn't mean it can't break down and then recover, but right now the trigger is, you know, still above this sort of congestion area, and so it's still kind of viable, but it's looking a little bit dicey here. It's looking a little bit dicey. Basically, if it consolidates here and starts to move up, you know, and again, you know, this is type of stock that it can sell down, consolidate, and then once it starts once it starts running back up, if it does, it can make a pretty significant move. So this is actually a really nice sort of, I would say, relatively orderly pullback and consolidation. So it's just um, it's just got to hold these levels and then start to turn back up, and then potentially, you know, it could actually turn around. But if it continues to sell down, then it's probably gonna come off the list at some point. So, and then the last one, last but not least, is another real nice orderly sort of consolidation. So this is a really, nice looking, as I keep saying, orderly chart, and it's kind of a low beta stock, right? And so zoom out a little bit on that. Kind of, it's kind of a weird looking little peak here, but nice sell down. And obviously, it's still, and this is sort of the same way. If for some reason there's like probably the system's probably got like some line in the sand, which I would guesstimate would be like somewhere down here, where if it breaks down below that, then chances are, let me go ahead and save that real quick. Um, Chances are, if it breaks down, it's headed to the 200-day, but it would probably drop off the list if it broke down. I'm not positive about that, but we just have to see. So let's see. I mentioned the Fed minutes are coming out today. I mentioned the inflation rate. I mentioned oil being almost $80 a barrel. A lot going on. A lot going on. There's a couple stocks that this one is not on this CrowdStrike. This is not on the pending list yet. Um, you know, this is just a couple charts that I had my eye on. This is actually like before today. It had a pretty good look to it, like pretty good little pattern here. But today it's making a humongous move, and I don't know exactly if there was news or what the deal was, but this is it catches my eye because it's similar to the one we just looked at, like IRM, in that it's had kind of a nice orderly sell down, and then it consolidates for a little bit and then starts moving. And so, like, if this was a pending stock, if this was a pending, if it would be like, triggering in somewhere around today's close. It'll be interesting. The problem with today's move is that puts it like, puts it way up here, and there's not that much distance left to the high. So, which, may or may not matter, but they tend to rally back to up towards the highs, and then that's about it if it's going to, keep going here. So, but anyway, it might be worth keeping an eye on. Let's see, I had another one on my watch list, this Nucor. This one actually looks pretty good too. This is a similar consolidation, right? Like, primary uptrend, really nice sort of pullback, and then it's consolidating here, and this could potentially be a stock that would hit the list, right? So anyway, there's a couple of just like ideas that I'm watching, and so the system may or may not add these to the pending list. So what is that to see? I wanted to look at a couple energy stocks because oil's been, yeah, look at ExxonMobil. Let me zoom back on that. Huh, interesting. Interesting looking chart on ExxonMobil there. It had a really sort of, deep sell down and was kind of doing nothing. Ran into the 200-day, but just recently with the price of oil, going up, it's managed to. So let's see, XOP. That's typically this is my proxy for the energy sector. Huh, interesting. So oil's $80 a barrel, but this is nowhere near the previous highs, which is kind of interesting to me. I don't know what that's all about, but short term here, everybody's been talking about energy, 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 and as the price of oil has been going up, but short term here, it looks like it's got a pivot high in, and so I'd probably look for it to sell down a little bit, maybe maybe have some sort of a pullback or correction like this. So um, yeah, let's see if there's anything else I wanted to look at here. Let's see, I had one more on my list. There we go. Huh, yeah, interesting. That one, SPLK, is really sort of taken off. Longer term, this has got an interesting looking sort of bottoming pattern. I think that's what I was looking at was this bottoming pattern here. So it's definitely turned the corner, and it's already made a pretty big move here as far as and so it's probably going to run into some resistance right where it is here. Looks fairly obvious that about this is a pretty good area of resistance right here. So I don't think I'd be wanting to chase it here, but at the same time, if it can break above this and then pull back to it, or it's just worth keeping an eye on, put it that way. So it's about to run into all this even if it can break over this, it's about to run into all this resistance. But longer term, decent looking bottoming patterns. So anyway, yeah, I figured I'd look at a few stocks that had my eye on. I could probably, let's see, continue without saving. I wanted to go back to the old S&P here. So yeah, it's going to be interesting to see how today plays out. And like I said, with the Fed minutes coming out at 2 o'clock, that typically affects the market a little bit. And so my guess is, they're talking about tapering, and we've had a bunch of Fed speakers this week, and so a couple of them they're ready to go. They want to start tapering in November, right? And quite frankly, I mean, first they have to taper their $120 billion a month bond purchases before they can, even think about raising rates to battle inflation. So they're in a really tight spot, and quite frankly, they should have, they always drag their feet on this kind of stuff. And what happens is, when the economy was like booming, sort of when the pandemic was getting better and the economy, the GDP was like, off the charts, then they could have moved quicker, but they didn't want to. They didn't want to torpedo the so-called recovery, and so now they've waited too long, and the recovery is sort of, it's hard to tell. I mean, quite honestly, it's hard to tell because at least they have the pandemic for cover, right? And oh, believe me, they use it too, you know. So there's a lot of problems out there, supply chain issues, chip shortages, rising energy prices. I mean, it's kind of a mess out there. And so, it's actually kind of surprising that the market's only down, 4% off the all-time high. So who knows? I mean, we could get a real sort of sell down, but anyway, it's probably best to be a little bit cautious and not be loading the boat on stocks until you can see the S&P break back over this downward sloping trend line. I mean, it's real simple, basic, textbook technical analysis there. No matter what I think it's going to do or anybody thinks the market might do or whatever, it's like a law of nature. It's not going back to new high, to the old high and new highs without breaking over that trend line in the 50-day first. So just looking at the chart objectively, the best idea is to be a little bit cautious. So there you go. Anyway, thanks for tuning in. I appreciate it. I will see you back here same time next week.